Hey, Nick's here. Welcome back to the Expat Files. I'm at my mountain home in Central America. More on that in just a moment. Right now, I just want to record this to talk about the most obvious trade in the world right now, today, and give you some backup on what some of the insiders in finance are doing. You're not going to hear this in the mainstream media. It is not a popular opinion to have, but people who run money for a living are fairly ruthless about not losing that money. And so you can deduce a certain truth based on what they're doing, not what mainstream media, talking heads like Jim Cramer, etc., are saying. In the first place, the world is entering a tremendous inflationary period. Now, obviously, there's been plenty of talk about inflation, especially since the great monetary print of 2020, or that started in 2020 and that ramped official levels of inflation up to 9%. Anybody who has to shop for food or pay for various expenses in keeping a household budget knows that the inflation was well above 9% and probably isn't running at whatever they're saying now, 2 to 3% or whatever the official rate is now. All of that is bullshit, right? You have to take that as a given. John Williams over at Shadow Stats clocks inflation at roughly 10%. I would say that's probably a good deal more accurate than the figure you're being told. But you don't need guys like John Williams or me to tell you anything about inflation. The purchasing power of your currency is getting kneecapped, and that's going to continue. Here's the interesting twist, however. If you look at the amount of money it takes to buy a house, the median house price in the U.S. is the highest it's ever been in dollar terms. $440,000 is the median price for the average home in the United States. That's outrageous. However, priced in gold, housing has actually almost never been cheaper. So you can see here, right, the number of ounces of gold required to buy a new house is almost at an all-time low. It was perhaps slightly lower in 1978, 9, 1980, around that. And so let's look at another one, right? Everybody knows that education, especially expensive university education in a place like the United States, especially for something like an Ivy League school, is absolutely off the charts. In the last, say, 10 to 20 years, student loans, the way the whole university system has been financialized, have driven tuition prices to the moon several times over. And so Yale College tuition, room and board, priced in dollars, is almost the highest it's ever been. Priced in gold, it's almost the lowest it's ever been. There's a pattern emerging, okay? Priced in gold, an Ivy League education at Yale is down 75% since the year 2000. And the most important economic resource, just raw material, commodity in the world is, of course, oil. Priced in dollars, oil is roughly the same that it was, right? There's a sort of multi-decade mean. Right now it's priced between $65 and $70, more or less, I think, as I'm recording this. Chops around a little bit. But priced in gold, right, oil is almost the cheapest it's ever been. In fact, it's down 90% since the year 2007, when oil hit a high in dollar terms, or peaked at least. I think it was higher in 2014, if I'm not mistaken, but roughly 2014 and 2007, there was a peak roughly around the same 100-something plus dollars a barrel. Priced in gold, it's the cheapest, almost the cheapest it's ever been. So what does this mean? The big trade, and if you want to draw parallels to the year 2008, it's an interesting thing to try to, just as a mental exercise. In 2008, of course, there was tremendous fraud in mortgage lending and then the securitization of those mortgage-backed securities, mortgage bonds. Houses were sold to people and money was lent to people to buy houses that they had no possibility of repaying ever. And so the giant fraud in mortgage lending was, of course, what the 2008 global financial crisis was all about. And insiders who saw the writing on the wall and understood the fraud as it was happening made huge bets against the system, buying certain credit default swaps, which are essentially insurance products on certain things happening or not happening, and they made tens of millions and hundreds of millions of dollars. Anybody who figured this out ahead of time made tremendous profits. If you think offshore structures like where to bank, how to invest in foreign real estate, and where to set up your foreign trust are difficult or complicated, they're not. That's not the hard part of creating an international lifestyle. The hardest part is the decision to go. That's why I wrote Secrets of the Expat Adventure, to share with you a deeply personal view of what happens when you decide to cast off the chains of a normal life full of predictable outcomes. I don't want to spoil the ending for you, but
you quickly discover yourself living your best life, the life you were meant to live, instead of the one you're stuck with. Across 156 pages, I'll share the incredible adventure I've enjoyed because of my decision to leave my old life behind and create an international lifestyle. I lay out for you the consequences of remaining in a life or location where everything is familiar, contrasting that with the almost magical growth and gain that is possible once you decide to take the path of adventure. There's something deeply mysterious about choosing an adventurous life. Once you commit, helpers appear, and events seem to unfold in an almost magically choreographed manner. You find yourself learning, living, and loving your life in a way that you thought you'd lost forever. There is no financial gain that compares with the recovery of the best parts of yourself. Fortunately, the decision to internationalize is also a great way to get wealthy. I give you real examples of how much easier it was for me to find and profit from the real estate and other investment opportunities I came across simply by choosing to play on the very uneven playing field of developing markets. If you're worried about what's happening in your home country and you're on the fence about whether or not you should create your own plan B, Secrets of the Expat Adventure will give you clarity and inspiration to choose your own path of freedom and adventure. I promise you'll never look at your life the same way again once you discover what an international lifestyle can do for you, your family, and your wealth. To get your copy, click the link below this video.
Now, the parallel to today is, of course, that the fraud is not in the mortgage lending portion of the markets. The fraud is in the currency. The fraud is in the bond market. The fraud is in the actual fiat currency of the various countries of the world. And so according to Zero Hedge, right, the dollar being the chief currency of used in trade all around the globe, Goldman Sachs, short US dollar, Morgan Stanley, short US dollar, Deutsche Bank, short US dollar, JP Morgan, short US dollar. And then this survey, Bank of America does a survey of fund managers either once a month or once a quarter, and it says it all. As of June 2025, fund managers have never been more net short the US dollar ever in history, or in the history since they've been taking and collecting data in this survey of fund managers. So, great quote here from Edward Dowd, who of course was, he's a former BlackRock guy, who was one of the real truth tellers during the COVID nonsense. He's a statistician, really, by trade. So the guy knows how to read data on big numbers and collect and read and sort of read between the lines. He's been a consistent voice of sanity, talking about the tremendous uptick in deaths in otherwise healthy young people, somewhere like the 25 to 55 age group. Like 5 to 10% above baseline normal. People are still dying at a huge pace, and nobody's allowed to talk about this. So what does Ed Dowd say about what's happening with the dollar? This is a quote from a YouTube clip that I saw. We're at the Ponzi finance cycle like we saw in the great financial crisis of 2008. Ponzi finance, where you're issuing loans to pay off old loans and the cash flows aren't there to support it. Okay? So what is happening in the world today is actually the ongoing, very slow motion death of fiat currencies. Fiat currencies all over the world are going to lose value against real things, just like they do from time to time. As I'm recording this, the Buffett indicator reached a new all-time high this past week at 213%. This is a measure of the total market cap. It's called the Wilshire 5000. So it has 5,000 companies in it instead of the Dow 30 or the S&P 500. So 5,000 companies, and the market cap of all of those 5,000 companies measured against GDP. And the ratio, once it gets above about 120, watch out. Above 140, you're definitely playing with fire. And then, you get it to levels like we're seeing today, where it's 200 and above. The overvaluation of stocks is historically has never been higher. What does that mean? It means that, right, the very powerful reversion to the mean that is coming is going to wipe a lot of people out. But you don't even need to wait for that to happen, because most of the gains that exist in stocks, in equities, is of course a direct result of all the monetary printing, so-called quantitative easing, et cetera, et cetera. If you're worried about the financial and monetary systems, geopolitical tensions, central bank triggering runaway inflation, and what all the above will do to your wealth, well, you should be. The question isn't whether or not you should own gold. The real question is, do you have enough? It doesn't really matter what happens with Bitcoin, interest rates, spiraling debt costs, or any other variable in our increasingly chaotic world. Why? Because the solution to all those risks is the same, and because central banks from Beijing to Moscow, Singapore to Switzerland, are all telling you what their answer will be when the wheels come off. It's gold, dummy. That's why I use the all-in-one dealer and vaulting service SWP Cayman. Why? because you can buy and sell right from your online dashboard, and SWP protects you from any risk of government confiscation or capital controls. They offer vaulting services in Grand Cayman and half a dozen other jurisdictions all around the world. It's convenient, it's fast, and it lets you move a big chunk of your legacy wealth outside the financial system quickly, while still allowing you to sell and move funds anywhere in the world when the time comes. To get set up with an account at SWP, go to swpcayman.com/ChristianNix. That's www.swpcayman.com/Christian-NIX. What does this mean? It means that if you don't own something that's physical, tangible, nailed down, something that you can put your hands on, you're going to wish that you did, right, when the reversion to the mean actually occurs. Principally, throughout all of history, the number one thing that you could own that held value longer and better than anything else is gold and precious metals. And so you're going to see continued devaluation, where gold is, of course, not going up. It's fiat currencies that are going down. They are losing purchasing power. Why? More people who have lots of paper wealth don't understand this simple dynamic is, of course, a mystery to people like me, but understand that having some portion of your net worth make it through to the other side of the chaos should be priority for anybody watching these videos. What we try to do here, and what I've tried to do by creating this channel, is to talk you through how I've created my own offshore structures, my own offshore lifestyle. And what we do is, with a team of people that I've partnered up with, is help you figure out what is best for you. And the number one question, two questions that I get asked over and over by people who want to set up an offshore kind of structure for their wealth, but also an offshore lifestyle, international lifestyle, I should say, like I've done for myself and my family, is number one, how much do you need to actually make it make sense? If you're going to have offshore structure, there's some costs involved in that. When does it make sense to do that, and why? Well, the first answer to the first question is a lot less than you think. If you have roughly $500,000 of net investable capital, net worth, not money that you need in order to live month to month, but you have that money set aside, either invested now or, right, the possibility of investing it into something else, liquid net worth, $500,000 means that you have plenty of money to set yourself up as an offshore, you're a candidate for offshore structuring. Why? Because even with as little as $500,000 in investable net worth, what you have is enough capital where setting up your offshore structure more than pays for itself. How does it pay for itself, Tane? It pays for itself because the costs and the fees and the trouble that you go to are minimal and will be more than compensated for growing your wealth in an offshore structure. How do you grow your wealth in an offshore structure? Look, the confusion about what offshore structuring is largely has to do with the propaganda around it. Obviously, governments everywhere try to spin offshore structuring in a very, very evil, nefarious light, as though there's something illegal about it. There's nothing illegal about doing the kinds of things that we talk about on this channel. Principally, what you're doing, and again, there's a segment of people who think that it's still possible to avoid taxes illegally. Obviously, those days are over. You do not fool the government. You cannot hide your money. You will get caught. You will go to a very small cell where you get to think about it for multiple years, and they will take your money anyway. There's no way to avoid taxes, and we're not talking about tax avoidance on this channel. What we are talking about is, and this is the important thing to understand, how you grow your wealth faster by legally deferring taxes. If you set up certain structures, what you're doing is legal tax deferment, and then that money tends to compound. And I can show you figures on this in another video, but if your money compounds at, say, 12% a year versus you have to pay 40% of that money in taxes, and then you try to compound that at a much lower rate, you have less capital to compound, and it's compounding less quickly, versus setting up the offshore structures that we teach people and help people do, that then allows you to compound more money, more invested capital at a higher rate of return because you're not paying tax on that money. Well, then your wealth grows much, much faster. And so this is the key to understanding offshore structuring. It is not about tax avoidance. Like I said, there's people who actually think that you can get away with that, or there's people who think that offshore structuring is about avoiding paying tax. You're not avoiding paying tax. You're allowing your wealth to grow outside the tax regime of your home country. For most people watching this video, that's going to be outside the US, totally legally, right? And then setting up the structures whereby that wealth just continues to compound over the years and decades, and right, if it's family kind of legacy wealth, then you're looking at, decades and, who knows, a century or more, long after you're gone, your family wealth continues to compound in tax-deferred structures. And so it's very important to understand and clarify those points. We're living through a period of probably for the next decade. Typically, when the Buffett indicator gets this high, when you see an all-time high and like a really, really overvalued situation in things like stocks, in paper assets, right, that are traded on exchanges like equities, what you see is like a decade of outperformance in stuff like precious metals. So it's very important to have some amount of your wealth in real stuff. Gold is still a very good one. There's a link below this video if you're interested in setting up a vault and keeping your precious metals stored outside your home country, outside the US or Canada or Europe, so that your government doesn't have easy access to them in the event that there's confiscations of any kind. Well, then the easy way to do that is below this video. There's a link. This is the vaulting service that I recommend, and I have had nothing but good experiences with them. You can trust these people. Check that out. And then if you're interested in setting up your own offshore structure, we make that easy for you to do as well. That's what we do here. And I've teamed up with just an excellent US-based legal service that really understands the ins and outs. This is an international tax attorney who went very, very deep in this. He has a tremendous, tremendous team behind him. And I like these guys. I trust these guys. This is who I use as well and who I recommend for other people. You can set up a free 15-minute phone call with me to see if you might be a good fit. And let's see if we can help you help grow your wealth offshore in tax-deferred kind of offshore structures so that your wealth can compound faster and so that your legacy wealth builds at a faster rate. And that also, quite frankly, your wealth is protected from some of the chaos in the years to come. That's it. That's enough out of me. That's what I want to share with you in this video. I'll be back with more on the ground, boots on the ground reporting from my little hideout here in the mountains in Central America. Look for that video coming up next. Thanks very much. And remember, the best way to avoid the coming chaos is get out of town.